Big tech is pouring hundreds of billions into AI, sparking market jitters and fears of a new bubble. Major tech companies are making an unprecedented bet on the future of artificial intelligence. In 2026, the biggest players are projected to collectively spend a staggering $650 billion on AI infrastructure. This colossal investment has sent shockwaves through the market, with investors questioning if this is a necessary leap forward or the warning signs of a dangerous bubble about to burst. This isn't just about abstract numbers. It's about the future of the technology that powers your daily life and the stability of the broader economy. So why are these tech giants pouring such immense sums into AI? The reasons are clear. They're racing to dominate what's projected to be a multi-trillion-dollar industry. AI is expected to generate a massive $20 trillion in economic impact by 2030, a prize too big to ignore. This spending fuels the development of larger, more sophisticated AI models and provides the vast computing power needed to run them. It's a high-stakes competition to secure future market dominance and deliver next-generation AI services to users and businesses globally. We're seeing intense competition with companies like Amazon leading the charge. However, this spending spree is creating significant turbulence in financial markets. Just recently, after unveiling their spending plans, Amazon, Google, and Microsoft together saw nearly $900 billion in market value evaporate. Investors are increasingly concerned that these breathtaking capital expenditures are outpacing the actual earnings potential of the new technology. Drawing comparisons to past tech bubbles, fears of an AI bubble are now being openly voiced by prominent figures, including the governor of the Bank of England and the head of Google's parent company, Alphabet. Share valuations in some areas are reportedly at their most stretched since the dot-com era, raising questions about sustainability. This situation presents a paradox. Companies are reporting strong underlying business performance, yet being penalized by the market for their aggressive AI bets. We're seeing what some call a tech paradox, where dominant AI hyperscalers are punished for investing heavily, while other tech firms are penalized for not investing enough. There are even concerns about circular investment, where big tech funds AI startups that then spend that money on cloud services from the very companies that funded them. This raises critical questions about returns on investment and whether these massive outlays will genuinely translate into profitable innovations that reach everyday users or just inflate valuations. Beyond the headlines and stock market fluctuations, these investments will profoundly shape the technology we interact with daily. AI is already being used by 78% of organizations, up from 55% in 2023, touching everything from customer service to supply chains. Generative AI, specifically, saw its organizational use more than double last year. These investments mean faster, smarter AI in your devices, more personalized online experiences, and new tools in workplaces. But it also raises questions about accessibility, data privacy, and the competitive landscape for smaller innovators. The scale of this build-out will define the next decade of digital life. So, are tech giants overspending on AI, and will this burst a market bubble? The world's biggest tech companies are indeed pouring hundreds of billions into AI, sparking widespread concerns about a potential bubble. While this innovation could bring future benefits, it's a stark reminder that rapid growth can sometimes outpace current value. As one analyst put it, "I would not debate the potential of AI. I would absolutely debate the time frame, and I would passionately debate the economics." Investors are watching closely to see if these massive investments will ultimately pay off for big tech and for the digital future we all share. This is GeeseFinance.